Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update this Friday. We waited till Friday because the end of the month was coming. We knew we would be making changes within our Global Tactical Opportunity portfolio for every one of our clients. But we wanted to wait till Friday so I give you an update exactly what we did and what we're seeing out there. At the beginning of May, first off, we actually reduced our allocation to equity-based investments by 40%. Across the board in every one of our model portfolios. That did a couple things. It not only reduced risk because we started seeing equity starting to get weaker, and some of our equity-based sectors were not within the top 5 sectors that we will run each and every month within a client portfolio. By reducing that equity-based exposure at the beginning of May, obviously we reduced our risk in our client portfolio. So as we saw the market decline, of course, our portfolios declined substantially less than what the markets declined. Now, at the end of this month, we re-rank our system and we looked at those top 5 sectors, and it essentially took us completely out of all equity-based investments across the board in U.S. stocks, small, mid-cap, and large cap, of course. And we've been out of emerging market equities for quite some time. We are holding quite a bit of cash. We've reallocated. We continue to hold an allocation in REITs. We continue to own an allocation now in the long treasury, along with the high-grade corporates and the aggregate bond. We will continue to be on a more defensive position now. What essentially has happened, our system's working exactly how it's supposed to work, which is mitigate major risk in a portfolio. Again, we're not concerned about 1 or 2 or 3% fluctuations monthly in a portfolio. We're concerned about reducing major risks that would cause real harm to a client portfolio, where things are down 10, 15, 25, 30% in a major recession. So our portfolio strategy is working exactly as planned. We have reduced risk substantially within every client portfolio. We are holding quite a bit of cash and fixed income, and now we are also have one of our ETFs, our exchange traded fund sectors, is actually short the market. So if the market goes down further, we can actually prosper from that. Our strategy is adaptive and objective. We do not let emotions run our decisions, and we suggest you do the same thing. Meaning, emotions are only going to get you into trouble, and making knee-jerk reactions to 2 or 3% moves in your portfolio is a fool's game, and I've always talked about that. You need to have a disciplined strategy, and it needs to be followed. We're doing exactly what our clients pay us to do, which is manage the upside and also manage the downside. Now, the numbers that came out today on the unemployment numbers were very pathetic at best. And essentially what this shows is the economy is in a slow growth mode and the job numbers are anemic and they're actually slowing. Now, whether or not that brings around our government to do more QE3, which I personally think would be a mistake, anything is possible. I think this really does hinge now on the election in November. And I think depending what happens between now and November with these job numbers and the economy, I think we will probably see a chance of a new government and hopefully new leadership that will lead our economy out of debt and into prosperous GDP growth. If you're a client and you have questions about your portfolio, please call us. We always appreciate your phone calls and your business and referrals. If you're not a client or you have friends who would like to become a client, we always like taking on new people, new clients who want to better their situation. Make sure you listen to the Sunday show. It's going to be excellent. And make sure you have a safe and profitable week. Have a great day.